Hello, everybody. Thank you for coming here today, and thank you, Paulo, for coming here today. So, today's startup grind is, well, a little bit themed about how to mitigate risk in investing in startups. But we'll get to that later. Paulo, when you first started working did you first start working in a company or?
No. Okay, dobar dan. Ja sam vrlo sretan što sam ovdje. Ja govorim hrvatski tako. I don't know many more words. So when I never worked for someone else. So yeah. So when I was studying in university when I was 18 years old, I was in Portugal and I decided that I wanted to be an entrepreneur. And in reality, before entering university, so in the summer before entering university, I took the plane and I went to UK, to London, and with a lot of catalogs from Portuguese manufacturers of goods for the house, like toilet sinks, tubs, taps, because I understood that Portugal was very strong on that area. So I thought, okay, I go there and I try to sell. So I stayed 1 month in the UK, knocking at the doors of the importers there. And so how did I do that? I went to the phone boxes in UK, and I had these yellow pages, and it was mentioned importers. So I called them and say, our representative is in UK next week. So can we have? Are you interested in having a meeting? So many people said yes, we welcome. Then they see a young kid, 18 years old, and so they got a little bit surprised. But I said that I was not the owner of the company. I was just the sales guy, because the owner, of course, was in Portugal. So I sold one first container and I got 3.5% of commission. That's good. The second container, I only earned 1.5%. Then the third container, the company said it was the last one that they would give me a commission, because they got a representative in UK. By the way, it was my contact there. So I understood that I could not work with the brands, because easily they would contact each other. So I started exporting to UK goods without brands. So that's how I started my entrepreneurial venture, and I had a lot of fun. I started exporting wooden tubs, so for the flowers. So you imagine the barrels, and like half barrel, so without brand. So I was exporting a lot of them to UK. But then in the following years, I visited my clients, and I was surprised to see that they were painting them, and like if it was used. And I said, come on, we have so care about these flower tubs to become beautiful, and now you come and you paint these like used. Yes, because people like used. Oh, you want used. So I went back to Portugal and started visiting the wineries there, and I started buying used barrels. But I bought them for half of the price of the new ones, because they were used, of course, they could not cost. But for the clients in UK, I was selling for double of the price, because they were already prepared. I was saving some time and money to them, and so it was really a good journey. I covered all Portugal in 2 years. I bought everything that was used in barrels from the wineries. And then I had a problem there, because the clients said, okay, but we want more of those, but I didn't have it. And they had to explain, no more used barrel. And they could not understand why, but in fact, I sold so many that, but then I start selling the new ones, and they have to come back to the old model. So I never worked for anyone, and that was my first venture. And on the second year of the university, I started a new company, which was providing training, IT training to corporates. And I hired all my colleagues in my university that were studying IT. I'm an IT engineer, and they were working for me. So giving training sessions to corporates. So that's my second venture. Now, on my third year, I was so, I thought I was the best in the world, and anything that I could do, it would be a huge success. I tried to create a company in a robotics area, because I think robotics would have a huge potential at that time, and which is proven today. And so I thought, okay, I'm the sales guy, but I'm not really a geek guy that is going to work. So I tried to find the best students in my class. So I invited the 3 most intelligent guys, because I thought these guys will do a fantastic job, and I just need to sell, So they all accepted, and then after they accept, one comes to me and says, "But Paulo, we will have a salary, no?" And I said, "I was not expecting that we have a salary until we have revenues, until we have clients. But we can put all the money in the company, and then we have salaries." "Oh, no, I thought we would have a salary." "Okay." The other one said, "You know what? I would like to do the PhD in US. Do you think it's compatible?" "Oh, yeah, of course. You just create a company in US, and that's fine. No problem. Just keep doing, And then I realized that my entrepreneurial mindset, was not at the same level of their mindset, and so I gave up. And some years after, I tried to create. I created several companies. I closed several companies as well. One company is for helium balloons to do advertising. Yeah. And so we start putting them in the roofs of the buildings, So because they would have a huge coverage in terms of people would look at them.
Visibility.
Yes, very good visibility, until some wind makes the roof tiles to fall into the streets and start falling into cars, etc. So I had to stop that. So it's nice. And then after some years, myself and another colleague of mine, we were partners into this training company. Then we had a partnership, and we created another company. And together with other group of people, we created NovaBus, which was listed in the stock market, in the Portuguese stock market, with the IPO in 2000, 4th July 2000. So the company has more than 2,000 employees, IT staff. So it's basically when my entrepreneurial activity, and then in 2006 I sold all my shares in that company, and I started becoming angel investor.
So what made you?
I never worked for anyone else. Basically, it's your.
That's what I was trying to ask and failing.
Yes, and in reality, I work for the municipality as a board member of the incubation center. They tried to hire me and pay me, and I said, "You are crazy. You're going to hire me? No, I can do this for free." So I'm a volunteer in the incubation center in Cascais. It's near Lisbon, and I don't earn any money there. I'm just volunteering, and I can just move away whenever I want. So I'm completely free. I don't depend on anyone. So I never worked for anyone else.
That's pretty great. You said you sold your shares and decided to become an angel investor.
Yes.
How come? What led you to decide that?
I always like to create companies, and I think that I've learned a lot during my entrepreneurial experience, bootstrapping and also going to the stock market and doing an IPO. So I thought that I could invest in some good entrepreneurs and benefit from that. And that's why I started becoming an angel investor, looking to deals, and I created a business angel network in Cascais. Then I was part also of the Portuguese Business Angel Federation, and in 2007 I was co-host of 35 leaders of business angels around the world. And in that meeting, it was decided to create the World Business Angel Association in Cascais. So it was the first world meeting of the business angel leaders, and it was decided to create the World Business Angel Association.
Oh, I didn't know that.
Yeah. It is in the same hotel where the 007 movie was shot.
How many business angels were at this summit?
In this summit that was happening,
Yes.
I don't know, I think 400.
No, not
No, that it was the leaders. So 35 countries, one representative of each country. Yeah, China, Japan, US, UK, Portugal, Spain, Italy, really many countries.
So
we didn't have anyone from Croatia at that time.
Well, there's some from Croatia now.
Yes, yes.
So the first startup you invested, what did you look for in a startup? Or did you just judge the team, the product, or everything?
Yes.
What did you decide to invest in?
Yeah, there are some myths in the market that say if you have a good idea, the money will come.
Yeah.
Okay? Everyone that tells me that, I say, oh, great. So I have a good idea. I have the cure for cancer. So give me the money. And people say, but how are you going to do that? Oh, it's not just idea, it's about execution. So the idea is worth zero. Execution is everything. We can have the best idea in the world, the best team in the world, the best product in the world, everything the best. But if there is not one single client willing to buy our product or service, everything is worth zero. So I try to more than the team. Of course, the team is very important. Right? I will come back to the team. It's about how they will execute the program. And someone tells me, an entrepreneur tells me, oh, I have this idea to sell. Okay, I give you an idea. Sell potatoes to supermarkets. Come on, we all buy potatoes in supermarket. Of course, those that have some gardens, they don't. You have vrut, yeah, vrut. So if you have vrut, you don't buy potatoes in supermarkets. But imagine that you have an idea to sell potatoes to supermarkets. Okay? So I need 1 million euros to buy a land here near Zagreb. I hire a person that knows how to grow the potatoes, and he says, this person is experienced in the market, says that 20%, I will earn 20% as profit, and I just want 0.005% of the market, Croatian market. Come on, 0.0005% is nothing. It's nothing. Yeah, easy. So I went to Erste Bank, and asked them to make the evaluation of my idea. And so based on my idea, they say that I will have 5 million euros revenues every year, but as we earn 20%, I will earn 1 million euros. So based on this, they say that my idea to sell potatoes to supermarkets is worth 4 million euros. So what is the problem of this idea? Did I contact any clients, potential clients? No. Do I know if they want my potatoes at that with that shape? Must I carry them to each of them supermarkets? So it's just an idea. It's worth zero. A different idea is someone says, I want to sell potatoes to supermarkets, and I've contacted several supermarket chains here in Croatia. And from the 5 supermarket chains, this one is not interested because they have their own production. This one is interested, but only this type of potatoes. That one is interested, but if I work exclusively with them, but they can do a contract for 5 years. You know, so it's completely different. And another thing is they bring the potato. The guy brings the potato. Look, I've grown this potato, and I've shown the potato to potential clients. So it's really good because he has mitigated a lot of risks when we talk about the risk mitigation and about the execution. Because one person, when an entrepreneur says, I'm very good, I will do this, this, and that, and my question is, why don't you do this now? And then you talk to me. Why you say that you will do this contact with potential clients? If someone has a project, business to business, so try to sell something to corporate, and has never contacted one corporate to understand if they really need that product, I don't hear this entrepreneur. I don't want to listen to what he's telling me. He's promising that he will contact the clients, but why he doesn't contact now? Contact now. What is missing? Where are they? Call them. Telephone, email. Move. Oh, they're in the US. Take a plane. Zagreb, US, it's less than 12 hours plane.
They have it as one of the staples in Lean Startup principle. They call it get out of the building.
Yes, get out of the building. Yeah. And other people say move your heads. Yeah.
So back to my question. So the first startup invested in, they showed the execution. Was it a big team?
The first startup is it was a resin factory that we, myself and another business angel, together with entrepreneurs, we were able to mitigate a lot of the risks. And in the first year of this startup, first year, so we built that factory. In the first year, we did 24.5 million euros revenues. In the first year, the first 12 months of this startup, we did 24.5 million euros revenues. Why? Because when we created the factory, we already had the clients, orders from clients. We know exactly what the clients needed. We had already agreements with suppliers of the raw materials. We had everything in place. If we would do what many entrepreneurs do, is like, okay, I have this idea, and I will create the factory, then I will look for clients. Yeah? It can happen that the clients do not want your products. Maybe they want another product, but you bought all the machinery, and you have the machinery there. So if you don't have clients, you need to pay the bills to the banks. What you do? Close the company. Close the company.
Or close the investment.
Yeah, that's it. So these guys, very good entrepreneurs, good team. And if you ask me if it's better the idea or the entrepreneur, of course it's the entrepreneur, the team. But if they are really good, they will come with a great idea that the market is willing to buy the product or the service.
So for every startup you invested in, you first make sure they already have market validation.
Yes. If I don't invest in a company that, if it's business to business, I don't invest if they never talk with potential clients. Unless it's in my industry and I really know about that business. But the probability of you finding a business angel that is super expert in that specific area is quite rare, you know. Yeah. Super expert and knows exactly everything in that area. Even on IT area, you have tons of companies. It's impossible anyone to know all the companies that exist in the world in a specific area. So it's very important to have validation. If it's a business to consumer, if it is a product, And there are several ways that you can mitigate this risk. For instance, some of the companies that have invested, I told them to go to Kickstarter or Indiegogo to try to get a crowdfunding reward campaign. So they try to get sales before they get my money. Several of them failed to do this, and so it showed that the market didn't want this product, so I didn't invest. On the others that they were successful, then I invested because they proved there was a market.
Those crowdfunding campaigns that failed, were they all B2C, or was it
B2C.
Were they targeting a niche or just general population?
No, business to consumer. On crowdfunding, reward crowdfunding is business to consumer. Usually in this business to consumer, in these reward crowdfunding campaigns, like you do in Kickstarter, Indiegogo, mainly it's because you have a product and you try to sell a product, a device or...
Sure, I know it's quite popular now to use crowdfunding as market validation.
Yes.
So people want to buy it, they want to even pay for it before it's even done, just to get a cheaper price for the first version.
Yes.
So my question is, of those startups, did you ever have a startup, or do you know another startup that has a niche that can't do a crowdfunding campaign because his or her target market
It's local.
Yes, or doesn't use crowdfunding much. For example, if you're targeting another elderly population.
Give me one example. I can, if you give me an example, I can try to solve the problem.
So it's, for example, a tourism tech startup.
A tourism tech startup.
Yes.
Yes.
Have you heard of those?
Huh?
Haven't you heard of those?
There are many. Okay, so all right. So what is the issue?
So, for example, if their niche is the vacation rentals market.
The vacation rental market.
Yeah.
Airbnb.
Yes.
Okay.
Kinda.
Yeah. So what you sell? You sell tours to the clients that go to do on the Airbnb.
But what if their target market isn't the people who use Airbnb, but the people who use Airbnb to rent out their vacation rentals? So, for example,
the owners of the properties.
So that's a niche market. Yeah.
So what the app does? So it is targeting the owners of the properties on Airbnb.
Exactly.
Okay. So what does the app do?
So, for example, the app would be a channel manager that manages Airbnb, Book.com, and many others to give the.
Okay, that's not business to consumer. That's business to business.
Okay.
That's business to business, and it's very easy. So you know who is renting in Zagreb. You go there and say, okay, there are 300 people renting this flat. Yeah. They have the phone numbers. Call them. Go to talk to them and say, okay, from 100 potential customers here in Zagreb, 50 said they are interested on this project, and they are willing to pay 20 euros per month. It's business to business. You know exactly where potential clients. If it's business to consumer for the Airbnb, okay, so you want to target tourists to come to Zagreb, for sure. Okay. Let's assume. And your target audience is the guys that will come to Airbnb. So you don't know who are they because they have not booked yet, correct? But you can make an agreement with the owners of this Airbnb accommodation, you know, and say, hey, I give you a special code, and all the bookings that will come through your code, you will get 5% commission, 10% commission, you know. Yeah. And by the way, if you give this code to your potential clients, they will get 5% discount as well.
So win-win.
I need water.
Okay, so let's go further a bit into the future. So you invested in 14 startups today?
14, I'm going to do the 15th investment.
are you just looking at the entrepreneurs, or are you looking at the industry you already know? Have you invested in a startup of industry you're not familiar with?
Yes. I understand zero about resonance. But I add value to this project in several ways. Let me give you an example. I have one business angel in my business angel network that is an expert in franchising. So he's looking for projects that he can turn into franchising. So he says, I understand zero about all the projects, but I understand how to turn one project into a franchise chain and help that expansion. So in all projects, I add value in all those projects, except when I try to co-invest together with other business angels, and I'm not the lead angel, but I can add value potentially in the future if this company comes to Portugal, for instance. I have some investments outside of Portugal, and when these companies come to Portugal, then I can add value. But with that exception, all the projects I try to add value.
Let's talk about EBAN. So I'm not sure how many of you are familiar with EBAN, but I'm gonna just say what it is and how it got started.
EBAN was started in 1999. It was a project by the European Commission and EURADA, that is the European Association for the Development Agencies, Regional Development Agencies, and is a trade association for business angels. EBAN nowadays has more than 180 members across 55 countries, not just in Europe. And these members are mainly business angel networks, federations, some VC funds, and some investment vehicles of business angels. So these are the main members of EBAN. And the goals of EBAN are to advocate the angel investment across Europe and try to implement this method of investment across Europe, and also to make people know each other. Because it's very important that when you do cross-border, that you know someone there, because maybe you don't know anything about the fiscal regime in, let's say, Israel, for instance. So, but if you have a business angel there that you trust, and if there is an investment there, then you may invest with him, and vice versa. So I don't know anything about Croatia tax system. I just know that people complain a lot, but that is not something unique from Croatia. Many other countries, I don't know any country where the people don't complain about the tax system. Maybe Ireland people, in Ireland they are a little bit happy with the system. So if people don't understand how the system works, then you need to have a co-investor. So that's why it's very, very important to know someone in that country. And EBAN tries to make these connections.
So it's basically verification of a startup by a local angel investor.
Yes.
Or is it good? What might be a problem? So
not just verification. If someone from Croatia says, okay, I want to invest in this startup, but because this startup has the main market in Spain, I need to find a business angel in Spain to co-invest with me because the market is there. Okay, so and then the Croatian business angel tries to find a Spanish business angel, and that's how things work.
That's just great. So how many approximately business angels are there now in Europe?
In Europe, there are around 300,000 business angels. 300,000 business angels. What is considered a business angel is someone that has invested in one startup in the last 3 years. So someone that has invested in a startup in the last 3 years is considered a business angel. Someone that has invested 4 years ago only is no longer considered a business angel.
Oh, so that's a requisite to be considered an active business angel.
Yes, to have one investment in the last 3 years. If you ask about the global figures of the angel investment, yes, last year angel investors invested 6.1 billion euros in Europe, 6.1 billion, while VCs, the venture capitalists, invested around 2 billion euros. And crowdfunding is less than 500 million. So business angels are the main source of funding for early stage investments in Europe. And in US, it's the same kind of ratio. It's I'm talking about early stage. In US, they also invest 3 times more than VCs in the early stage.
It's very, very interesting. So when you started, you joined the event first as a member of
Portugal.
Portugal
In 2006. Yes.
So between 2006 and 2012, when you became president.
Yes.
So
I had several roles in EBAN. First I was on the board, and then I became vice president, and then I became president.
That's pretty great. So
And now I'm President Emeritus. So then there is nothing else now.
so what does a president emeritus do?
That's my question. I don't know as well. So maybe you know. No, the President Emeritus may represent EBAN in some important events if it is required by the entity. So that's all.
So similar to the president, but with way less paperwork.
It's a retired president. It's a retired. So it has the title, but doesn't have the duties of active president. You know?
So, maybe a little bit better.
Yeah. Maybe.
So risk mitigation in investing in startups. Can you tell me a little bit more? What is it exactly? I mean, yeah, the words say it, but can you elaborate?
I think that the main problem in the world of early stage ecosystem is about the risk.
Yeah.
Why is it about the risk? Because we always, every day, we learn from the ecosystem that there are thousands, hundreds of thousands, millions of entrepreneurs or people willing to create their own company. So I don't think there is a real issue there. And we also know that there is lots of money in the market because we see a lot of transactions. We see the banks creating private banking, because if there is no money in the market, banks would not create private banking. There would not be a market for them. You know? So what is the problem? The problem is about just the risk of the project. So the entrepreneurs think they have an idea, but the investors think it's too risky. So if it is too risky to invest into this into a certain project, then if we try to mitigate the risk, then the willingness of the investors to invest in a startup will increase. It's simple as that. And so my work with entrepreneurs, the ones on the incubator, in the incubation center, I tried them to mitigate the risk in order for them to be able to raise money from investors or to get money from the bank, or even for them to start a company. Many of them, when we mitigate the risk, they understand that there is no risk. And so they say, so if there is no risk, why should I get an investor? I start by myself and they start next day. Because they don't need an investor. They don't need to go to the bank. You know, because I didn't realize it was possible to do this without risk. Of course, it's not possible to, in many cases, to mitigate 100% of the risk. But on average, the entrepreneurs that come to me, on average, I reduce 2/3 of the risk immediately. 2/3 of the financial needs of the entrepreneur, that the entrepreneur is thinking that he needs. And of course, when we talk about the risk, the financial risk is one of the main risks of the entrepreneur. So if we can reduce, then the willingness of the entrepreneur to start is higher. So sometimes people say, oh, I have this idea, blah, blah, blah. And I said, okay, why don't you start? You know, I work in the bank and I need an investor. I'm looking for investment, and I say, okay, look, imagine that this supermarket chain there places an order of 1 million euros for your products. Would you start? Yes, I would start immediately. Would you need an investor? No, I would not need an investor. I would quit tomorrow. Okay, so just go and talk to them. So simple as that. But people think that I need money. Because in Europe, we are a little bit addicted with grants.
Yeah.
And so I want to create a company. I need money. First money, grants. Let's see which grants. I go to Impact Hub and say, hey, which grants are there? You know? Yeah. Then, no grants? Okay. I go to try to find some money from the bank, but not giving personal guarantee. So I believe so much in this project, but I don't give my personal guarantee. So the probability of success is very low. Third, because I don't have clients, I didn't mitigate any risk. I go to talk with the business angels to see if they put the money. If they put the money where I don't want to put my money, you know? And I try to convince them to invest in my project, but I don't want to put my money. So it's very, very good. And this all is about the risk. And that's the point. One example that I tell is, as one entrepreneur, 45 years old, he came to me and said, look, in the past 20 years, I've been very successful. I was director of this company, sales manager of that company, managing director of that company, president of that company. Fantastic. Huh? I'm looking for 1 million euros for this fantastic project. And I put 15,000 euros. I said, tell me, what is your problem? In 20 years, you were only able to save 15,000 euros. Where did you spend all your money? In 20 fantastic years. It's about gambling, it's alcohol, it's drugs. Tell me, what is your problem? Where did you spend all the money? And by the way, you went to the bank, and the bank doesn't give you the loan. So what did you do to the bank? You have done something very, very bad to the bank. And by the way, you have contacted some friends, and there is not a single soul that is able to give you 5,000 euros to invest in your project. So you don't have friends. What did you do to your friends? What did you do to your friends? And by the way, you have not a single person, a single relative, anywhere in the planet that says, I trust you and puts 5,000 euros in your project. So tell me, what is your problem? And he says, Paulo, I have money in the bank, but I don't want to use it, you know? So he believes so much in his project, but he is not able to put money from his pocket, and he wants someone with deep pockets, you know, to invest in his project. If the project is successful, he will be a millionaire, and he will be a fantastic entrepreneur. If it fails, the project, the investors lose the money, but they are there to lose the money, okay? They are risk investors. That's why they are there. And so because of this mentality that people try to put all the risk into the investors, that the investors do not want to invest into the project. So you need to mitigate the risk. So if we say that the initial project has 100% or 100 units of risk, if we can call it like this, you need to reduce these units to 30. And on the 30, you may have to accept 10 of them as your own risk as an entrepreneur, and 20 for the investors. Of course, if it's an entrepreneur that has just graduated from school, the parents are poor people, you know, they don't have money, I understand. That's no problem. He can try to raise 1 million euros and you say 15,000, but he needs to explain that, look, I don't have money, so I've asked 5,000 from my mom, 5,000 from my grandma. I went to the bank and they give me 5,000. That's fine, no problem. But someone, 20 fantastic professional years, is not able to put more than 15,000 euros, that's really bad. And by the way, he was trying to get 10,000 euros per month salary. So in 1 month and a half, you'd get, you'd be paid back, which is good.
Okay, yes.
Yeah, fantastic.
Did he get the investment?
Huh?
He didn't get the investment.
Oh, what do you think? Yeah, of course not. And what did he say? What did he say? He didn't get investment. What did he say? In Portugal. In Portugal, the banks do not give loans to entrepreneurs. They don't want risk. He blamed the banks. The angel investors in Portugal, they really don't exist. I could not find one single angel investor. The venture capitalists in Portugal, they are not really venture capitalists. They are in another business. So he blamed everyone except himself. It's always good to get excuses not to execute things. We blame all the others. It's not my fault. It's their fault.
Okay. So since we started with your first question, we might as well continue. Are there any questions from the audience? Oh, please.
How many investments do you look at before you decide to make any investment? What's the ratio between pitch to you and actual investments?
I'm fortunate to have a very large deal flow, so which I don't need to look into all the deals very deeply, because in some cases other people has done the due diligence, etc. But I would say that I invest 5% in 5% of the projects. 5% of the projects. But I know cases that they invest 1% of the projects.
What do you think about social entrepreneurship? I mean, I know that in Europe it's still not such an exploited topic, but for example, it's already becoming a topic on the other continents. What is your personal and, like, in general, the mood around the business industry?
Yeah, that's a very hot topic now in terms of social investment. In Europe, people usually call it impact investment.
Yeah.
I think it's a fantastic way for many of social projects to get funded. I think there is a lack of knowledge in the market in terms of the funding process, and from the entrepreneur side, the ones that have social projects, how to get it funded. You know, for instance, if you are an NGO trying to do something good in Zagreb, for instance, it's not possible for an investor to become shareholder of that NGO, because there is no power. He cannot, the number of shares, he cannot have, say, I have certain number of shares in this NGO. So the model, the financial model, you have to rethink the financial model. So if this NGO has some services that they charge money, so imagine an NGO that gives food for poor people, but yet they have a place also for elderly people where they receive money from those people that they are not poor. So they have two kinds of business, one social and one, let's say, normal business. In this normal business, you can try to agree that an investor invests in this normal business and they receive like a percentage of the revenues, a royalty based on the revenue. So I invest 100,000 euros and I say, okay, 10% of all the revenues come to me until I get 120,000, for instance. You know, so this is a different model of becoming a business angel on equity. So I think that it's really important that there is knowledge from the entrepreneur side and from the investors, because the investors are not aware of the situation. What I think it's an opportunity is for a lot of foundations in Europe that give free money, grants. So instead of giving grants, they start understanding that, okay, if I do 1 million euros of grants per year, instead of giving free money that I will never return it, I can invest part of that, let's say 500,000 euros, in social projects where this money can come back to the system. So my impact with the same amount of money, I can have a much higher impact, a much higher social impact in the market. So I think it's a huge opportunity in Europe, and I see a lot of foundations already working there. It's so important that the European Investment Fund, from the European Investment Bank, has created fund just for social investment. So I think it's very, very important. What I see many entrepreneurs is trying to say, okay, let's say homeless people in Zagreb, okay? And we create an NGO and say we want to take care of these homeless people. And so based on this, I will try to raise money from investors. That's not to raise money from investors, that's a grant, that's free money. So if there is not a business model behind it, it's very difficult for the investors to invest. Then it becomes philanthropy. So
yeah, I meant rather not NGOs but social businesses, because these are companies like who are getting money, but they have this additional element.
You need to have some source of funding that is not public funding, and it's market funding. So it's the market that is paying for a service. And if you have that part, then based on that part, then you can try to raise money in increase. I can give you an example. One NGO that in Portugal that takes care of handicapped people and with mental problems. They have a huge plot in land, and they created a place to grow special flowers and a greenhouse and a huge greenhouse. And based on this, they got investors investing on the greenhouse because there was a market to buy these flowers. And with the profits they got from that, then they fund the normal activity they have, and they can give better support for handicapped people. So you need to always think a little bit about the market.
I think it's called for mission enterprise, mission-oriented enterprise with a mission. You sell seashells, but with that money you also purify water nearby.
Yeah, but you need always to get some revenues from the market.
Yeah, with money to sustain your activity. Yes. So, any other questions?
I have two other half questions, so you can go on.
Paula is up.
Yes,
Paula.
No.
Sure. Apologies for the odd question is, but you said in the beginning that you had never worked for anyone.
Yes.
I'm just wondering, like.
Except the state for tax, because we all work for the state. Tax. We always give money to the state. Yeah.
I'm just wondering if you consider that fortunate.
It was my life. It was like this. I wanted always to be free. I never wanted someone to say I should do this or should do that. I always wanted to have my destiny on my hands. So it was my decision. If I have worked for the government, for public sector, what would have happened? I'm sure I would not be an angel. I would never be an angel investor. I would never create that company, etc., etc. So my life would be completely different. Because sometimes you are in the right place in the right time with the right people, you know. And I was fortunate to be in the right place with the right people at the right time.
Thank you.
So first, how to the question? Maybe it's like, do you invest mainly in Portugal, in Europe, or in US?
No, I have 11 investments in Portugal, 3 outside of Portugal, but in Europe.
In Europe.
Not in US.
Okay. How do you translate? We know concepts of usual incorporation in the US that has legal frame around it, things like vesting, stock options, and stuff like that are poorly treated in Europe. I know it's really badly treated in Croatia. I mean, there's no legal framework to implement it here. And I don't know, I know in Italy they're struggling to implement this in new legislation. How do you handle it? I mean, investing is something that is extremely important at the beginning of the startup, and you can't deal with it here.
You are right for your point. However, I don't know any country that there is not a way to solve the issue. So there is several ways to have the same effect. However, the problem which I found in Europe is that the legal system doesn't work. So you can have all the laws in the world, but if the legal system doesn't work, if it takes 10 years to decide something, then as an investor, I tend to tell the person, okay, let's create a company somewhere else, in Delaware or whatever. You know?
But the idea is to have a company initially here, and then if it blows out of proportion, then you move it to the US, or when do you start dealing with the problem?
Of course, I think that if you need money or not, if you need money, then you need to follow the money. So if the money tells you, okay, you have to create a company in Liechtenstein, you have your startup. You are raising 5 million euros. You don't find money elsewhere, and there are investors that say, okay, if you come to Liechtenstein, we invest 5 million euros. You create a company in Liechtenstein, or in Italy, or whatever, you know. So when you start raising money, you have to think about it. What I see
but there's also where the market is.
Yes,
So,
but it's totally different things. You can create a commercial arm of your company in UK, for instance, not being the holding company, and that company in UK is owned by the Croatian company. So in terms of the marketing and to access the market, you don't need to create something to change the headquarters there, you know. But I've in some of my investments, and I've helped other entrepreneurs to raise money outside. There are always creative solutions to think about how to do that, how to manage that issue.
okay. And one last thing, what your opinion about assessment of the crowdfunding situation in Europe? I'm not speaking about Indiegogo. I'm speaking about Seeders or Capital.
Yeah, Seeders, one of the co-founders is a Portuguese guy. So when we talk about crowdfunding, and people tend to misuse the word crowdfunding, because in reality there are 4 types of crowdfunding. So there is the donation crowdfunding, so you just donate money, and so no problem, that's fine. People know that they are donating money, they don't expect anything in return. Then we have reward crowdfunding, where people pay something in advance and they expect a reward, which usually is the device, the product, whatever. It can be just a thank you message in the website, but people expect something on return, but no equity. And then we have the crowdfunding on debt. So crowd lending, which means that people lend money to other entrepreneurs, and that's one possible crowdfunding. And then we have the equity crowdfunding, where they say they compete with the business angels, where a lot of people invest money into a crowdfunding project. So my opinion, in terms of donation, no problem. Reward crowdfunding, it's the best thing it has ever happened for business angels to verify if a business to consumer product works worldwide. I don't think there is better way to try it than through this crowdfunding, because of several reasons. First, you get money up front. Second, you get a lot of comments from potential customers saying, oh, does your product have this feature? We would like to have this feature, and I can tell you some stories about interesting things that happen. Third thing, you get a lot of exposure, free exposure, because there's a lot of media just looking to these deals, and you get free exposure, and you don't need to give equity. So as an entrepreneur, you don't need to give equity. By the way, what is the best money for an entrepreneur? Is it the bank money? No. Business angels? No. Venture capitalists? No. Their own money from the entrepreneur or family or relatives? No. It's clients' money. So clients' money, it's the best money for an entrepreneur. So on reward crowdfunding, you can have then crowd lending. I think it's good that crowd lending exists, but usually it's not for startups. It's more for companies with already revenues, that they already have revenues.
And people, as I understood, they are usually getting those funding, they are asking those fundings are people that are in subprime situation, that are offering
Depends.
Higher returns, high interest rates.
Yes, but there are companies getting loans through crowd lending, not just individuals. So in the crowd lending, then we can analyze each of the sections, but let's not talk much about it because it will take. I think it's not our topic today about this. Then we have equity crowdfunding, and on equity crowdfunding, I think it's a very interesting concept, but people must be aware of the problems. So what we see in terms, I'm a big fan of equity crowdfunding, by the way, just to say that. However, what I think that crowdfunding is great if there is a lead investor, a business angel, for instance, with proven track record, and can talk with the entrepreneur every day. I don't believe in a model where there is an entrepreneur with 1,000 investors, and can you imagine what happens? Every day one investor asks 2 or 3 questions, and then the entrepreneur is trying, of course, to run the business. He doesn't answer to the investor, and the investor starts putting a message in Facebook and say, what happened to the entrepreneur? Did he disappear? He's not answering to my questions. I didn't receive any report. Everyone received a report, and another one, oh, he's not sending reports, what's happening? And then the entrepreneur is not doing anything else because he's only talking with the investors. So he loses focus of the business, So it's very important that there is a lead investor. Another problem is that if the entrepreneur is trying to raise money after the equity crowdfunding campaign, he needs to understand the mindset of the investors. I will never invest in a company where there are 1,000 shareholders. How can we get agreement of 1,000 shareholders? There is always one crazy guy that will not accept anything. So I don't invest. I'm going to lose my money, So, and if you want to do equity crowdfunding, but you want also then raise money from angels or VCs, what is wisely to do is that it creates a structure where all the individual investors, crowdfunding investors, invest in that company or in that structure, and that structure is represented by one person into the company. So I don't mind to have one guy that represents 1,000, but I just have one shareholder. There is one shareholder that represents all the other 1,000 shareholders. In that case, I don't have any problem. But if the entrepreneur doesn't think about this situation, then it can have some problems in the future.
So it's the angel risk investment method that's along those lines.
Yes. There are several platforms that have this kind of investment, and I think it's the best way to invest. And it's good also for the investors, because if they have someone that has done the due diligence and will follow the entrepreneur, I think it's always better than allowing just entrepreneur to be by himself or by herself and doing whatever they think they should do.
It kind of sounded like an investment fund.
Yeah.
One guy with a
Another problem that I see on the equity crowdfunding, and if we see the largest market in Europe is UK, and by the way, why is UK the largest market? It's mainly because there are tax breaks there. So the enterprise investment scheme in UK and the seed enterprise investment scheme gives opportunities for investors to deduct on their income tax bill between 30 to 50% immediately. So it reduces the risk. What happens is that many of those investors, they don't understand about valuation of the companies. So if an entrepreneur wants to have a higher valuation of a company, of course, crowdfunding, they will get the higher valuation of crowdfunding. So if the entrepreneur is really just looking more for valuation and money, crowdfunding, I think it's really fantastic, equity crowdfunding. If it needs mentoring and networking, then business angels seem to be, at least for my opinion, to be a better option for the entrepreneur.
Okay. So I would like to ask, since you've been doing the lectures about mitigating risk in startups for business angels, so you also understand better than most what a startup entrepreneur could do to enhance his or her chances of getting an investment, of appearing more attractive to an angel investor.
Yes.
Can you tell some of the best or some of the best things they can do?
What I teach for business angels, I also teach for entrepreneurs. Yeah. It's about the risk mitigation and how to mitigate the risk of a project. Yeah. And there are two levels of risk. Two levels of risk. If you talk about an investor, it's the investment risk and the project risk. Okay, let me explain. Investment risk. If I'm an investor and I invest in a startup, but I can deduct my investment in my income tax bill, let's say 100%, as it happens in Malaysia. In Malaysia, they give 100% of income tax break, which is fantastic. Then I don't have any risk because I've invested into the company and I've already deducted all my investment. Even if the company disappears, I have zero risk. Okay, so this is investment risk. There are several ways to mitigate the investment risk. Then we have the project risk. Okay, for the business angel, of course, the investment risk is the most important because it's about the investment. Okay, but in many cases, it's impossible or hard to mitigate the investment risk. So you need to mitigate the project risk. And in any project, there are basically 5 risks. The market risk, if there is market for this project, how is the competition going to react to our entrance? Then we have the entrepreneur/team risk. Are the entrepreneurs able to execute the project as they sold to us? Then we have the legal risk. We can all of us think on fantastic businesses, but they are not legal. Or they, in some cases, and this is the most, in many cases it happens, they do not have the freedom to operate because you are using some technology that you are not allowed to use. Even if the entrepreneur doesn't think is infringing any patent, you know. So the freedom to operate on this legal part is very, very important. Then we have the financial risk. And the financial risk is about the money that you can lose. So instead of you need 1 million euros, if you need 300,000 euros, it's better. So your financial risk is low. Because if you imagine that you have 300,000 euros to put in a business, so if your risk is reduced from 1 million euros to 300,000 euros, so there won't be much problem for you. And on the financial risk is about if you are dependent on one potential client only. So imagine I have this huge client that will buy my product. But okay, if this big client goes bankrupt, what happens? You know? And then we have the operational risk. Does the entrepreneur know how to operate the business? Does the device work? Does the device work? I've received many entrepreneurs trying to invest into perpetual machines. Perpetual machines, for those that are not so familiar, are machines that you input some electricity and it will generate more electricity than it received without any external source of energy. No wind, no solar, no heat, nothing. It's a miracle, yeah? So you cannot patent it because it's against the physics law. But I've received so many entrepreneurs trying to sell these kind of devices and projects, you know? So this operational process is, does this work? So you need to talk with people that know if it will work or not, like universities, etc., in order to avoid investing in a project that seems so fantastic. By the way, if you Google perpetual machine, you will find many projects in the internet about perpetual machine. If it exists, perpetual machine, old oil companies will disappear. All these lights, we just put the perpetual machine there, turn it, and we have light. We don't need anything. Huh?
Okay, so I would like to ask, is there any other advice or any topic you think we could cover that's...
I think that when you talk with business angels, if you try to raise money, try to put yourself on the other side. Because in some cases, I talk with entrepreneurs and say, look, what you are offering me is this. You, if you were an investor, would you accept an entrepreneur? No. Some entrepreneurs, they don't understand what they are proposing, what they are suggesting. So they must understand if this business model works. I have entrepreneurs coming to me with projects that the rate of return is negative. So it means that if you put 1,000 euros with this project, you will lose money. What is common in many cases is they send a business plan without the costs of the sellers, of themselves. And then I ask, okay, so you are working for free? No, no, no. It's up to negotiation with us, between us. And I say, okay, that's fine. Okay, okay. Tell me what you expect. Well, in my industry, people receive this salary, so we were thinking about this, 3. Okay, then, okay, 3 people times this amount of money times this. Okay, so imagine that they were having a profit expectation in the business plan without salary costs of 50,000 euros. Putting the salary costs, it goes negative, 100,000 euros, you know? So it loses money all the years. So I say, so you want me to invest in a project that will always lose money? Oh, we didn't realize that, sorry, we will come next time. So people don't understand sometimes what they are proposing. So you have to understand a rate of return. Don't come to an investor offering a rate of return of 3% or 4% or 5%. It's not for them, you know. You have to understand if it makes sense. So if you understand if it makes sense, then you are able to sell to the investor. And of course, mitigating the risk. One example to mitigate the risk. You want to sell online Apple smartwatches, okay? And you know that if you buy in quantity directly to Apple, you will get 25% discount. Let's assume, okay? So you need 200,000 euros to buy inventory for Apple phones. So you have 2 options. If you don't have money, you go to investors and say, invest 200,000 euros in my company for me to buy the smart, the Apple watches, the Apple phones. And then the investor will think twice. But if you say, okay, the inventory will belong to you, and in worst case scenario, you can sell this inventory to that chain there that they accepted to buy with this 10% loss or whatever, then the investor is not going to, doesn't see the risk as 200,000, but sees the risk as 20,000 euros. So if he sees the risk as 20,000 euros, then he invests immediately. But it's the way that you structure the deal. A simple way is, for instance, if you need to buy a machine, you know. So if you need to buy a machine, and I've done this several times in my startups where I invested. If they need to buy a machine and the machine costs a lot of money, I try then first not to buy it, but to rent it during 1 year, 2 years, in order to see if the market wants the product. If it's not possible, then I try them to talk with the supplier of the machine and say, okay, if this project fails and I don't have clients, whatever, are you able to buy the machine back to me by 50% of the price? And a lot of manufacturers accept it. So instead of thinking on a risk, let's say, of 300,000 euros on a business, your risk is 150,000, because instead the machine, they will buy you the machine for half of the price. So you have to mitigate the risk, trying to mitigate every single risk in your project. One question.
That was great. There's only time for questions. Well, I would like
Here is very strict. So an entrepreneur is trying to create something, but then the state comes, it's not your time now.
It's the same with my life.
We are not in a psychotherapy group now.
Now, if you want to answer the question.
No, I'm not good on that. No, what is the question?
No, when you're evaluating a company for investment, how do you see projections and plans? How do you balance what's the proportion of the profitability against company value increase, capital increase?
Valuation of companies, that's a topic I love, you know. So startups.
Hardware is one thing, for internet is different.
No, but I love that topic. So people tend to do business plans, yes? Business plans. People, entrepreneurs do business plans. And I think we all work with Excel. Excel is a feature. It's possible to massage the Excel. So we put the number we want. You know, if we want to put 10 times more, we put 10 times more. There is no problem with that. So the problem is people do projections, do valuations based on the business plan. And if the business plan is done, if the valuation of the company is done by a professional company, you must see that on page 2, usually it's page 2, they say the valuation is based on the data provided by the entrepreneur. So if the entrepreneur doubles the projections, the valuation doubles. Do you know, any of you know, any company or any entrepreneur that has pitched 5 years ago with a business plan, and that business plan really happened? Exactly. Not better, not worse. Exactly. Do you know any? Okay. So if there are no good business plans, in terms of reliable business plans that will happen exactly, there are two options. It will be better or it will be worse. But it will not happen like what is expected. So it's hard for me to understand how wrong data can come into a process and then evaluation is done. So if this is wrong, any process that you put wrong data will give a wrong valuation. It seems for me, it is like this. I don't understand how people think that they do put numbers in an Excel and based on this, it comes a valuation, and they say it's 4 million euros, 3 million euros. So we know that the business plan will not happen. So if the business plan will not happen, how can we get a good valuation? A good way to do it is to say to the entrepreneur is promising you some revenues, yeah, the business plan. And you as an investor say, okay, if you are saying that this company will have revenues on year 4 of 3 million euros, if the company has, and your entrepreneur wants to have 70% of the company, no problem. If this happens, that you are promising me, I agree with you. You, investor, you as an entrepreneur, you remain with 70% of the company, and me as an investor, I get 30% of the company. Your business plan, what you are promising me, and what you are offering me, I accept it. Accept it, no problem. But if it doesn't happen, as you say, that it will happen, then we need to adjust. Simple as that. If it is better than you are promising me, then you will have more shares than you are asking. Instead of 70%, you'll have 80%, 85%. Doesn't matter. But no one will feel bad about it, because everyone agrees that the valuation is based on the future, on the reality, not on the potential. And based on this, it's easy to find an agreement.
But when you give them, when you realize the investment, you put the money up front.
It doesn't matter. It doesn't matter.
So how do you correct the?
Yeah. So you need to agree on a lock-up period. Usually 3-4 years. So where there is no transactions in terms of equity, there are no distribution of dividends, and so what you agree is you agree a milestone or 2 milestones or 3 milestones, doesn't matter, on year 3 or year 4, and you say, okay, so I do the investment. I don't care if I have 1%, 2%, or 98%, because it's a lock-up period. Okay. So it will not change the equity, the cap table will not change during this period. And on the end of this period, we will see how was the milestone achieved. And if it was achieved, entrepreneur has what he wanted. If it has been better, then the entrepreneur will have more shares. If the entrepreneur doesn't reach what he was expecting, then of course the valuation will come down and I will have more shares of the company. I think it's fair, because it says entrepreneur is promised something, and based on the promise, he gets the valuation. So why, if he doesn't get this promise, why the valuation should be kept the same? I think it's fair for everyone.
Okay, just to clarify, then, you've got treasury shares, and what you're going to do is you'll issue them in varying quantities, varying proportions to the entrepreneur and to the investor based on the milestones.
You have several methods to do this. One way is to say to the entrepreneur that the entrepreneur has, let's say, in the beginning, so we agree that 70-30, okay, percent, and then the entrepreneur has 70% of the shares in the beginning and the investor has 30% of the shares. After year 4, if the entrepreneur needs the results or the milestone was not achieved, then entrepreneur sells for €1, 5%, 10% of the shares.
Option with low strike price.
Yeah.
Okay.
And then the same for the investor. If the investor needs to transfer shares to the entrepreneur, he can sell for €1. That's one way. Another way is the company can issue new shares, and those shares are allocated for the entrepreneur or for the investor. Another way, you have a stock options plan there, and in these stock options, the shares belong to the company, and these shares are going to be distributed to the investor or to the entrepreneur. The stock options usually in many countries have a problem because they have a maximum of 10% that is allowed to have the shares, the company own shares during a period of 12 months. So sometimes it's not so easy to implement. There is always a way to do. Another way that is possible to do, and it depends on the laws in the country, is that you can invest in a company, equity, and you can do quasi-equity, you know, and this quasi-equity can be transformed into equity if the milestone is not achieved, or it's given back to the company for free, let's go like this, if the milestone is achieved. So you can work in different ways. I mean, any lawyer that understands about startups and understands about this can create this process. But this way, I've seen many. So I've seen a lot of projects that are fantastic projects, fantastic entrepreneurs with great business angels. They don't agree on the valuation. Why? Because entrepreneur thinks this will be the next Google, and they did the Excel, and they massage the Excel, and the Excel says it will have profits in the next 200 years. 200 years. So the entrepreneur says, "Come on, this will be the next Google," you know. So why am I selling the company so cheap? And the investor is afraid about the risk, because in terms of the potential, all entrepreneurs talk about the potential. So the problem of the investor is about the risk, so they don't agree in the valuation. Having this type of agreements in terms of the valuation is fantastic. Of course, there is a traditional way that angel investors invest, not discussing valuation, is called the convertible notes, which means that the investors make a loan to the company and expect that in 2 years' time there will be new investors that will make a valuation of the company, and based on that new valuation, then they convert the loan into equity on that new valuation. I don't do convertible note because I think it's not good for angel investors, at least for me, because if I can invest in a company at 1 million euros pre-money valuation, why am I going to invest at a 10 million euro valuation? Because it's like you are investing in a small dog, and then they say that your money will be converted when the dog is big, you know. So you want to have a part of the dog initially, you know, so not when it's big, because then you will have just a little part of the dog. So but it's me, but there are investors that like to do comfortable notes, so it's fine.
Okay, I think everyone has learned quite a lot today. I know I have, and I want to thank you for taking the time to be here today. And thank you everybody for coming here. And thank you.